Welcome to this week's market drama. We'll begin with the markets. The S&P 500 was up 0.8%. NASDAQ was up 2.3%, while Dow Jones was down 0.4%. Bonds barely moved. And the story in the markets was that growth stocks handedly outperformed value shares. So you can see that the difference between NASDAQ up, more than 2% and Dow Jones down for the week. And the big story there was Nvidia, the artificial intelligence chip maker, reported a blowout earnings quarter and revenue beat as well. This is a company that has over $13 billion a quarter, and it grew 100% year over year, right? So Nvidia did remind this quarterly update that the implementation of AI is still in its early stages, and it will likely remain a theme going forward. Financial stocks pulled back early in the week after the S&P downgraded its credit ratings for 5 regional banks, citing stresses in commercial real estate, right? So that hurt financials. It also helped overall value stocks, which tend to be in the banking sector. So turning our attention to the Fed Powell's speech at Jackson Hole, there was no big reveals or shift in expectations. He mentioned essentially that he remains focused on bringing down inflation. But unlike last year's speech, there wasn't as much of an aggressive stance of like that they were going to have to hike a lot more interest rates, right? Like they said they'll be open to doing more if necessary, but it wasn't as kind of like a hawkish speech. So the reaction of the market was fairly muted. He didn't say anything new. It was a bit of a disappointment, frankly. There was no fireworks there. When it comes to earnings, the Q2 will likely mark, based at least on consensus estimates, the end of earnings downturn, which we've seen over the last 3 quarters. This is good news considering the market has mostly been going up based on valuation rather than earnings, right? So the 2 biggest drivers of stocks is either earnings growth or valuation, meaning like price to earnings multiple going up or down. The price to earnings multiple has been the one driving the markets up. Going forward, we'll have to see earnings start to deliver from a growth perspective. The good news is it appears that we're kind of towards the tail end of the downturn that we've seen in earnings. When it comes to macro data, we also had the housing sector show basically signs of life. New home sales reached their highest level in July since early 2022, despite the fact that we've seen the highest mortgage rates in years. So what's in store for next week? We have core PCE data, your inflation data, that is supposed to be, our consensus estimates is supposed to be for 4.1% year over year. This is slightly a lower number than we saw the prior month of 4.2. That will be an important data point as anything related to inflation is. But then we also get on Friday U.S. payroll data and unemployment rate data, as well as U.S. hourly wage data, which are all very important to give us a barometer of how the overall economy is doing here in the US. That's it for this week. Stay tuned for next week.